Welcome back after Memorial Day. I got to spend it with a lot of family. Hopefully you did the same. Hopefully you took time to really think about what that meant. I remember as a kid, we used to take the Memorial Day weekend, go to New Mexico, go to my uncle's ranch, and all the family get together. We're talking about all the distant relatives, and it was the only time we really saw them. It was all on my mom's side. It was awesome. We'd spend all day Saturday spending time together. Everybody come back Sunday morning, and it was crazy about that is we had a lot of people within the family that were joined up with different groups, if you will. Let's call that groups. And they happen to be rival groups. And these rival groups, it doesn't matter what blood was, is what you claimed. Let's call it that. So whatever it is you claimed is what you defended. And they would slug it out. People get stabbed. There was some interesting stuff that went on out there. And then by the next morning, my uncle's a preacher. He would have service and they would be helping each other to service. I'm sorry, cuz, that kind of stuff. So it's pretty wild to see. And that was also a very interesting time when we had the elders of the family, my grandmother, my aunt, my great aunts, and great uncles. And as I was really little, I mean, they were getting around. They were very active. And anything would start getting crazy like that. You see two different factions start to have it out. The elders would step in and they would just point and people would calm down. But as they aged, they're sitting around wheelchairs, they're sitting out their oxygen, they still had that power. That's changing. The world is changing. They don't have that kind of authority anymore. And it's sad to see that that is happening, that people are not respecting their elders the way they should in a general basis. I know there's those that do, but I miss that. I miss that whole thing. So we got to spend time here in the place in Missouri. And it's going to be a very common thing for me and my family to keep that going, start revitalizing that type of tradition around the same time. Remember the people who sacrificed everything so we can have that kind of an existence. So one, my appreciation for those who have suffered from loss and those who have given the ultimate sacrifice. So going into the market this week, I know it's a solemn place to get started. We are looking today, of course, it's the 27th of May, getting close to the end of another month. We're going to be halfway through this year before we know it, guys. 2025, I've barely even gotten used to even writing 2025 as I'm taking, keeping track of expenses and all that kind of stuff now. Now we've got this. So we had durable orders, and it was a revision from the last reading. Last reading, 9.2%. It dropped to 7.6 in that revision. Then we're also showing a forecast was actually forecast to be really low, a big swing into the negative. It actually was still a very negative swing, but not near as big as anticipated. We had the housing price index that did drop. It dropped. It was forecasted to 0.2%. It dropped to negative 0.1. So FHFA seeing things to drop a little bit there. S&P saw a small drop from what they anticipated, so not as much. Consumer confidence comes out a little bit later today, so we'll find that out later this week. The Fed minutes, that's going to be a heavy mover. That's 28th. Tomorrow, GDP. Initial claims, continuing claims always has a hit here. We've got pending home sales, personal income, personal expenditures, personal consumption expenditures. So PCE, another one of those readings, those indexes, the personal consumption expenditures index, which is, another reading that the Fed uses, which is much like CPI, consumer price index. Now, these indexes are made up of different things. They're not everything people spend money on. So we get really confused as to what is inflation, what's not inflation. What cost is going up versus what cost are they reading? So let's talk about indexes for a minute. So we've got multiple different indexes that people are familiar with, right? And the index is really kind of a report card about over a broad spectrum of whatever it is that they're looking at. Now let's take stocks, for instance. You're going to have probably the most common S&P 500. That's going to be the broadest index. That has 500 of the most successful companies, and it's watching their performance, and it shows you, and they're varied companies all across the different types of businesses in the United States. And that shows you how the broad economy is acting as well as the broad markets. Now, we got the Dow. The Dow is a little bit different. The Dow is a more selective, it's tracking only 30 major companies, mainly industrial and blue chip stocks. And because there are fewer companies, they don't show quite the big full snapshot. So you can see some big movement in the Dow. Yeah, that's why you see such large movement because of the fewer companies that are in it. Now, people, we see the NYSE going across your the tickers and stuff like that on the news. That's the New York Stock Exchange itself. Now, it does have a index in it, which is the NYSE Composite, and it gives a broad look over how the New York Stock Exchange itself is performing and overall market sentiment. Now, then we have the NASDAQ. Now, the NASDAQ is both a stock exchange and an index. It lists many tech-focused companies. The NASDAQ Composite Index tracks almost all the stocks listed on the NASDAQ exchange. So it gives a good sense of how tech and growth stocks are performing. There's also the NASDAQ 100, which focuses on the 100 largest non-financial companies on the NASDAQ. Offers a snapshot of major players and in tech and in innovation. So you can see how that is. Now, what are other two indexes that people talk about? Actually, the one main index that people talk about, especially when it comes to mortgages, right? Now, we talk about the CPI and the PCE. Those indexes, very, very finite indexes compared to what's really out there, we're spending money on. Actually, they're kind of BS indexes, if you ask me. Now, we get into the treasuries, are the index that I want to talk about. So what's interesting about that, that's what people focus on when it comes to mortgages. Oh, the 10 years moved this or this, so we should expect such and such for mortgages. Now, when it comes to the treasuries, they are a government debt, meaning you're lending money to the U.S. government. So they're considered very safe because the government's going to pay you back and they have a flat rate of return. And all they're going to do is print more money to pay to you anyway. So you're going to get paid more or less. Now, the MBS, on the other hand, slightly different. It's bundles of home loans sold to investors. So they're going to take a bit more risk in that because it depends upon mortgage people with mortgages making their payments. Now, treasuries can typically be seen as very stable. Whole MBS can offer a bit more yield, but they'll be a lot more added risk. Right? So we have something that goes sideways in the market. Now, we have big, can be countries, can be companies, can be indexes, can be funds, whatever, putting money into both of them in tandem, sometimes different. What happens with these, they will move typically opposite of the stock market because the stock market is saying the economy is doing well. If they're putting money into the stock market, if they're going to bonds, a flat rate of returns because they think the economy might be getting a little bit weaker. Inflation's going down. They want more of a stable place. So that's why we start seeing those differences. But this last week this last month or so, we've seen the stock market go up and down and swing, and the bonds go exactly the same. Very, very different. So traditional thought process when it comes to the markets, we've proven that's not the way to go. You need to be watching these things. You need to understand these things. And we've been calling what the bonds are going to do. I've been calling what's going to happen with rates. And it's been happening that way. So let's take a look at those real quick and see what's going on in the charts, because the charts are why you come here. Maybe you come here to just watch me shoot the shit. There's that too. So looking at the mortgage-backed securities, here we are. I'm going to move some things over here you don't see that are blocking me, but see this channel? We've been following this channel. Look, remember the stock market took off and then bang, took a beating and came back up. Bonds followed suit. But look at this. It's staying within this channel. It pulls away from the channel, very similar distance. And look, it's pulling away from the channel, very similar distance that it did here. And it's pulling right back into it. We are heading downward. Now, when I'm looking at this channel here, we are heading downward. I think we're going to get back to this. This seems to be a fairly strong floor. We blew below it in one day. I'm like, well, boy, we out of the channel and below the floor, but went right back up above it and stayed there. So we did a gap up open on Friday, came back down yesterday, Memorial Day, and then today we have we jumped up a little bit, but then we're climbing. So today might be a good lock day. We're hitting right on the moving average as well. So we have that. You see that purple line there. It's kind of hard to see. I'm going to zoom in here. So we have a moving average that we're hitting on. That may or may not have a whole lot of strength to make it difficult to get through that, but it looks like it did hold on us. But then we get to the top of that channel, which isn't very far off. Top of the channel is what? 98.75 or say 95. So we're 20 basis points. So it's 20 ticks to get up there. So that's 0.25% in cost, or probably about 1/8% in cost in reality when you get down to the rounding it off. So if it was me, somebody saying, hey, Aaron, should I lock? Personally, I would consider it at this point. But also we have this ceiling. It could break up to that ceiling. As it's shown, it does like to break out, hit ceilings and come down. We have a ceiling right here. So by the time it gets there, it could be today it'll go here. Tomorrow we'll probably jump up a little bit and go into this. And if it does break out of that, that could be our ceiling and we'll break back down into it. That's my thought. Now we can come back and see if it actually does that. That's my belief it's going to do. So in fact, actually, let's just even snip this. Maybe we can even have a little bit of a prediction in here to play with if I can get my computer to play the way I want to. So let's do a little prediction here. Let's say it's going to, we get a little bit of blue going on here. I'm thinking we're going to stay, probably that might be our peak. If we jump up here and hit this, we might bounce off of it. And there's a chance if we do jump up out of it, the next day we hit here, that will be our ceiling, and then we will be coming right back down off of it. This is my guess and getting right back into the channel. That's my guess. I could be completely wrong. We'll just see if that ends up happening. But that's what I'm guessing might be the case. I'm going to make sure that I am actually sharing that with you guys. So I'm going to go ahead and I'm going to double check because I can't tell if that's sharing properly. So I'm going to share that snipping tool. There we go. So you can see what I was talking about here. Yes, I don't think you got to see that. Or it was, tomorrow, I'm guessing, again, guess, 20 points, pops up. And if we do break out of it, we're going to hit that ceiling and come right back down. That's my guess, but we're staying this channel. We're going to keep going down. We're going to see interest rates continue to go up. So that's my thought process. I could be wrong. I'm just looking at price action. But we have a lot of stuff coming up this week, personal income, personal spending, PCE, Fed's decision tomorrow, or Fed, let me see here. Yeah, Fed minutes tomorrow, initial claims. There's a lot of stuff. So we'll just see what price action does versus news. I will talk to you guys on Friday, and I will not be at this place when I talk to you.